All right, I think we're live. Brian, you here? I can't hear your mic. Testing, testing. Okay, 1 second, guys. It seems like Brian's mic isn't coming through.
Can you hear me now?
Yeah, there we go.
All right, sorry about that, guys. So welcome to another edition of This Week in Crypto, everybody. Really excited you could join us. It's been a bit of an interesting week here. Before we jump into it, as always, I want to introduce myself as the Director of Marketing at Santiment. I'm Brian. I'm here with Dino, our Director of Content. We'll be going over everything that's been happening in the markets over the past week according to what our data is showing. We'll also be touching on plenty of our models and indicators that we regularly use to help make us the best quality analysis that we can for our community. I also want to remind everyone that investing can be done at your own risk. We are not here to give investment advice or any sort of indications of what you should do with your money. We are simply here to give the most objective analysis that we can based on what our data is implying through historical means and understanding of which metrics can be most valuable for the likelihood of where markets can go next. So keep that in mind, and we'll jump right into what's happening this week. I'm going to sort by market cap here over the last week to show what assets have been doing. And even though it's been mostly a ranging period for both Bitcoin and Ethereum, with Bitcoin up around 4.75%, Ethereum 3.75%. Many altcoins have been doing quite well, and this has been quite a theme as a lot of alts have caught up to what Bitcoin has kind of done as far as dominance in December and the first part of January. The last 2 to 3 months have shown that a lot of altcoins have sort of taken turns in catching up and having their moments in the sunlight, so to speak, in terms of being able to run up, right? And over the last week, Filecoin, which has been under a bit of a scandal, so to speak, over the last week, they almost 2x'd. We had assets like Mana, Hot, Pundix, Coin, and Harmony among many assets that were either above the 2x mark or very close to it. Overall, though, the story is pretty clear here. Altcoins have been really churning along. There are, of course, exceptions, and you can see plenty of coins that were slightly in the red over the past week. It looks like the largest coin to drop within the top 100 was Theta Fuel after its huge week last week. So this is more so just a mathematical correction than anything else there. But you know, I encourage you guys to really go into Sandbase here and check out our screener, because what you can do goes far beyond just looking at the price returns based on market cap. You can, of course, go into the filter section, choose the types of projects that you really want to look at. You can sort by daily active address, curriculums, age consumed, network growth, all sorts of things that are going to be more tailored to your specific trading strategies. So this is a really, really useful feature that I recommend to everybody. Next up, I want to briefly go over what's been happening just today in terms of some of the key stories that have been trending on our SAN Trends page. For those of you who don't know, you can clearly just go straight to this icon here and go to SAN Trends, and you'll be able to see which assets, as I'm showing now, are trending and getting the most hype and increase in conversation. It's not just overall conversation. Otherwise, you'd always see Bitcoin, Ethereum at the top of the list. But you will see from a percentage standpoint which types of subjects are getting the most increased hype, as we see now for Cardano with its Coinbase Pro listing. It's had a sustained pump for the last couple of days since this has happened. Also, SafeMoon has been trending quite a bit and being touted as the new Doge. So tons of shilling going on for that, which is why it's number 2 on this SAN Trends list. Coinbase, of course, all related to Cardano. Lena has done a pretty large correction after a Binance listing. And that kind of rounds out some of the key topics here. But I encourage you guys to always keep tabs on what's going on in the SAN trends page there. Now, moving on to Bitcoin, Ethereum. So we're going to start off by showing what's basically a brand new feature on Sandbase. You guys may know this same metric from the weeks and months of us showing it on graphs.santiment.net/social, which essentially shows a different perspective of this same metric. But what it essentially does is it shows the amount of mentions over time for these assets, and also weighs the ratio between positive and negative comments according to an algorithm that we implemented many years ago. This is one of the most, probably the most valuable social metric that we have in terms of showing what the overall sentiment is for many different assets. And they aren't just restricted to ERC20s. This one, we have it for XRP, we have it for Polkadot, we have it for Cardano. So for those of you who are following those non-ERC20s, this is a great metric to give you some context for them when you maybe aren't seeing as much as far as like whale holder behavior and stuff like that for those assets. So really cool here. I'm going to isolate for just Bitcoin, Ethereum in just a second, but overall, what this is essentially showing is anything in the positive. It means that that asset, if you look in the top left here, I won't move my mouse or it's going to make that thing go away, but this top left window here is showing what each of these 7 assets, that is, are doing in terms of being above zero, which means there's a very positive sentiment, or below zero, which means that people are more negative than usual. And this is respective for each asset. So they all have their own balance over time that we weigh, and it's essentially measured versus just that asset, right? So a weighted sentiment of 43, as it's showing for Bitcoin right now, is actually leading the way. And it looks like a lot of positivity is coming in for that particular asset compared to the rest of the markets right now, which is quite interesting. You can also see notably XRP, Binance Coin, and Polkadot are the 3 that are just slightly in the negative right now, but really not a big concern there. I'm going to isolate, as I said, for just Bitcoin, Ethereum now. And you can see Bitcoin here in pink, Ethereum in red, and you can see just how impressive this Bitcoin weighted social sentiment spike is right now. It's actually the second biggest spike we've had in the last month. And we can even zoom out just a little bit now that we're looking at only 2 assets. And you can see that it's basically the second in the last 3 months, actually, which is quite impressive. Overall, our rule of thumb, the reason this metric is so important is because when you have really, really high marks, that means that there's kind of this sense of euphoria and overconfidence in the markets that often leads to traps. You can see some examples of it here. Obviously, when we had, yes.
Sorry, yeah, so just one thing to mention is that it might be better to look similar to what we do on graphs, to instead of looking at the total sentiment, look at the Twitter sentiment in particular. The reason for that being because our machine learning algorithm has been trained on Twitter data. So usually the data directly from Twitter is the most reliable in terms of the actual sentiment towards a particular coin. And this is usually what we also show on our weekly streams in general. So if you can, yeah, you take the 1-day interval there and you use the bar chart. There we go.
Yep, no problem.
So even though, there we go. So even though in total, it is true that on some other channels, the sentiment towards Twitter, and that is mostly Telegram, but in general, I personally don't really like using Telegram data all that much because it is quite populated with bots, and in general seems to skew more on the positive side than most of the other channels. So on Twitter in particular, the sentiment is still relatively bearish. It is somewhat consistent with what I've been seeing on my timeline. And in general, if you look at the previous or historical trends, this is what, last 3 months. So maybe also just show like the last 6 months or a year even. I think you can kind of see that the sentiment has been fairly on point throughout the last year. So the last time that we were this bearish was basically the last time Bitcoin corrected at the end of February. This is, in fact, even the sort of more bearish sentiment towards BTC on Twitter, in particular, once again, on crypto-related Twitter accounts, compared to that correction. This is actually, I think, a 5 or 6 month low in terms of Twitter-related sentiment towards Bitcoin. So the lowest in September, really, or the start of the rally. So I don't know if I'm really seeing that much bearishness on my timeline, but in general, it is what our data is showing for Twitter in particular. Like I said, other channels like Telegram seem to be fairly more bullish, but number one, our machine learning algorithm has been trained on Twitter data, so usually it's the most reliable source of sentiment information for BTC or any asset. And number two, I think Twitter sentiment has proven its worth previously, not just for Bitcoin, but for a bunch of other assets as well. So it seems like for now, Twitter is remaining pretty bearish on the Bitcoin's potential in the short term, which previously has been a fairly hopeful signal. So if you look at if you look at February, after the latest correction, that was sort of the last time that we went deep into bearish territory before we were able to break the 60K mark. Similar thing if you look at January. Once we started to correct, we had another sort of venture into a bearish sentiment territory before we were able to break the 45 and then eventually 50K mark. So, and then before that, even while Bitcoin was kind of already starting to rise between September and October, there was a period there at end of November, beginning of December, where we also left the bullish sort of average sentiment, and we went into the bearish territory once again, and that was really the point at which Bitcoin was able to break the 20K mark. So throughout this rally over the past 6 months, as far as our Twitter data is concerned, pretty much every major point for Bitcoin's short-term price action, 20K, 40K, 50 and 60K, all of them were kind of earmarked by this drop in relative or average sentiment of the crowd, making this current trend into overwhelmingly bullish territory, hopefully optimistic or cautiously optimistic for Bitcoin's price action. Obviously, it's not the only thing to keep in mind, but it definitely does seem to indicate that the crowd isn't as bullish as we might expect, right? On the other hand, if you look at the funding rate, which is also another sort of way that we try to gauge the current sentiment of general market, this is simply a different group of stakeholders. So we go from the crowd, or basically just social media, to what the derivative market is feeling about BTC. So if you only isolate the Bitcoin's funding rate, you can see that similar to the total sentiment spike that we saw today, there was also a relative spike in the funding rate of Bitcoin. This is on BitMEX in particular. There was also a spike, I believe I saw it on Binance, as well as I think it was Huobi, a smaller spike in this funding rate, basically suggesting that Bitcoin longs are starting to pay Bitcoin shorts, or that we are sort of seeing a more confident move of Bitcoin derivative traders into a bullish territory. It seems like this latest drop below 58K has already liquidated some of those longs, so the funding rate has started to normalize already. We're down to 0.04%, which definitely is in sort of a dangerous territory for Bitcoin. At least it hasn't been for the past 3 to 6 months. So it seems like after BTC was able to break the 59K yesterday, there was another sort of surge in bullish sentiment, not just on derivatives market, but it seems like on some social channels like Telegram. However, the latest sort of dump below 59 has seemingly squeezed some of those longs, liquidated some of the over-leveraged people, and now we're back into this sort of relatively neutral territory towards BTC on the derivatives market. So in conclusion, our social data does seem to suggest, especially on Twitter, that we're fairly bearish. The derivatives data seems to suggest that yesterday there was another sort of hopeful push of Bitcoin bulls, but it was squashed by this latest drop that we saw yesterday as well. So currently we're back into the sort of neutral territory, which is good, right? If you look at both the Bitcoin sentiment and Bitcoin funding rate, high or elevated levels of both of these metrics have marked periods of short-term price correction for the top coin. It happened both in January and it happened in February, and it also happened back in like the August and September of last year. Both of those sort of price rallies were marked with very high funding rates, suggesting that the market in general was getting very bullish, and then very high levels of Bitcoin sentiment, especially on Twitter, suggesting that not only the derivative market but also the general crowd was feeling very, very good about the coin's potential. Seeing low levels is what we want to see, if we're hoping for another 60K breach. So for now, sentiment looking good. Funding rate, would like to see it go back to like a totally neutral territory or even a little bit bearish. But, I'll take 0.04% for now.
Yeah, it's interesting looking at this perpetual contract funding rate for BitMEX in particular. You can see anytime it gets to these extremes, that tends to be when the corrections occur, just as Dino was pointing out here. And our latest happened just a few days ago on the 13th, around the beginning of this week. That's when we had our top. We got over 60K again, and essentially got our subsequent drop right afterwards. And just yesterday, we had another push followed by yet another drop. And like you said, we're back at about 0.04%, which is not too bad. So the price can break either way. We could be seeing another push toward or above 60K this weekend, but it's tough to tell just from this metric alone. And on Twitter, we're looking at this compared to what I was showing at the beginning with the total, where there is kind of that bias with Telegram and a lot of bots that are kind of manipulating it. So I agree with Dino that this is a better perspective. For the sake of showing it for the first time on Sandbase, wanted to kind of give a glimpse of everything in totality. But here on Twitter, you can really get an accurate glimpse at just how negative Bitcoin has gotten in terms of commentary, and just a little bit of a lower social volume than usual too, which is combining to be the reason for this low bar that really hasn't been seen since October. So just about 5 months ago. And I'll also show Ethereum on its own really quick as far as Twitter goes. And we're seeing kind of the same thing. It's mostly negative days over the past month and a half, really. And that's a good thing. It means that we may be able to, push back at or above 2,000 in the near future. Of course, the perpetual funding rate will be a good supplement to that data for Ethereum. And it's kind of showing the same pattern as Bitcoin. Ethereum tends to get a little more aggressive in their funding rates. So right now we're at 0.07%, but relatively speaking, that's pretty low compared to these giant spikes we saw. It actually got up to 0.61 at one point in very early January before we eventually had that correction. But yeah, Ethereum and Bitcoin essentially looking about the same right now. And you can, of course, be informed when that changes just by keeping close tabs on these two key sentiment-related charts here. And speaking of Ethereum, I'll also jump really quick to show what the fees are doing right now. It has cooled off a little bit, but overall, we're still at a pretty high rate here compared to where we were for the vast majority of 2020, when we were sitting, at a low of about, if I can get it, about $1.09 in late November. We got up to a high of about $37.60 just about a month ago in mid to late February. Now we're still sitting at about $15.95. Not the greatest sign. We'll want to see potentially a drop below around $12 around here again that we saw in early March when Ethereum began to rally again. But when fees are this high, it undoubtedly has an impact on people's reluctance to want to make transactions on a consistent basis. And as we've talked about many times in our insights, activity and utility and overall transaction count staying high is going to be key for prices to continue to push up and up. As far as mean dollar invested age goes, I'm actually showing 4 different assets here because they all tell an interesting story. Bitcoin here in tan, it's mostly stayed flat. For those of you who are unfamiliar, really quick synopsis. This is showing the average age in which dollars have been invested in these respective assets. The lower the bar, generally the better, because it means that dormant tokens are being moved along with those dollars that are invested within those respective assets. So right now, Bitcoin is staying pretty low. There's a very, very mild uptick in the last few days, but nothing really to be noticed. Same with Ethereum. It's mostly flat with just a very, very mild uptick the last few days. Litecoin has actually been dropping quite a bit and showing a little more dormant circulation in the last week compared to Bitcoin, Ethereum. And then finally, look what Chainlink's done after a long period, basically the entire year, beginning in the last week of December. The dormant invested dollars were consistently moving down. And finally, it looks like right around the 12th, right around about a week ago, we started to see those dormant dollars stop moving at that same frequency, which is why the line is moving up now. So that's a bit of a concern for all you Chainlink holders out there who are hoping that we're going to get another, crack at $35 and above in the near future. It still could happen, but just know that dormant dollars are starting to dry up in terms of being constantly revolved the way they were for the majority of this year thus far.
Right. So if you look at the mean dollar invested age for Bitcoin for the last 4 years, it basically paints a picture of how so far the cycles have worked for BTC. Actually, yeah, take the maybe last 7 years just so we can see the patterns a bit more clearly. There we go. And even the one before, in 2013, we've also seen a similar sort of drop in Bitcoin mean dollar invested age, I believe. So in general, the downtrend or a declining slope in mean dollar invested age basically suggests a period of redistribution where coins are moving on the blockchain, especially expensive coins or coins that were purchased at higher prices, because mean dollar invested age essentially puts more onus or weight on the coins that were purchased at relatively high prices, right? So it takes the average age of all Bitcoin on the network. It takes the acquisition price of those coins, and then the next time that they move on the blockchain, it kind of takes that into account. So when you see these very shortly, when you see these declining slopes of a mean dollar invested age metric, it basically means that the asset in question is being redistributed among the market network participants, and usually that's a healthy sign, a sign of so for example, in 2017 we've seen basically a sort of 6 to 8 month period of redistribution of Bitcoin, and then both in 2017, 2019, and back in 2013. The top usually comes at a certain point in Bitcoin's mean dollar invested age valley or decline. And once we see an uptick suggesting that the redistribution is over, it usually, so far at least, has indicated the end of the rally and the beginning of a bear cycle for the coin in question. And for Bitcoin, usually that kind of impacts the entire market. So for now, the mean dollar invested age chart does show that the redistribution is still going on. I would assume it's a redistribution from general market enthusiasts and speculators towards institutional investors, which is different. Every cycle, the redistribution from and to different stakeholders varies. I think in 2013 it was from like early adopters of Bitcoin into the first wave of enthusiasts, right? In 2017 it was sort of the first mainstream sort of appeal or mainstream cycle for Bitcoin, where there was redistribution from that early wave of adopters and the first sort of Bitcoin enthusiasts into the general retail and mainstream crowd. And then now I think it's a redistribution from those people into institutional wallets. For now, mean dollar invested age continues to decline, suggesting that redistribution is not over. Once we see this chart starts to, move on the incline again, it has in the past indicated that, the correction is sort of imminent, and we might be looking at the beginning of another bear cycle. For now, luckily, it doesn't really seem to be showing that for Bitcoin in particular, and for most other assets, right?
Yeah. And you can see that it is showing this flattening out period, but the flattening out period certainly doesn't mean it's suddenly going to just jump up like this, right? We've seen in other periods of time, such as August of 2017, I believe this was actually right around the time that China FUD was happening, and there was that temporary ban that was causing a lot of people to sell off. It was flattening out here, and a lot of people assumed that the correction would happen, and then all of a sudden way more dormant token circulation ended up happening, and that could very well happen here, and we could see a continued lowering of this mean dollar invested age. So it could break either way. We aren't seeing this huge drop like we were back here, of course, but this is a very good price leading indicator, especially on a macro scale. So think more on the mid and long term when it comes to this type of chart. Overall though, you're going to see, if you're seeing this kind of drop, you're going to see prices tend to react very positively after the fact and not during, which is why we really like it as a leading indication here. Okay. So next up, I'm going to briefly show what whales are doing. This chart here is indicating what different tiers of holders are doing based on the size of their addresses, in terms of the amount of those addresses fluctuating up and down over time. The gold line here is generally what we deem as the most important, because this is the whales for Bitcoin. It's showing the addresses with 1,000 or more Bitcoin tokens in it. This is roughly 55 million or more or so. I think 57 or 58 now as of the time that prices are sitting at. But the whales, as you can see over the last month, have reduced quite a bit. We were at 2489, which was the high for the year back on February 7th, and we've gradually dropped all the way down to 2278, which is maybe a 10%, maybe 9% drop overall in terms of these really, really top tier addresses. Meanwhile, the 10 to 1,000 Bitcoin addresses represented by this red bar aren't really moving up. So we're kind of seeing that both the 1,000 plus and the 10 to 1,000 groups moving down in tandem, while the small addresses 0.1 to 10 in pink and the micro ones up to 0.1 Bitcoin, those are just shooting up right now. So a bit of a concern there. That's generally not what you want to see. You want to see the large addresses accumulating most, while the smaller address can kind of just react to them in FOMO or FUD respectively. But right now, we saw this huge ascension of Bitcoin's price while the whales were accumulating, and then shortly after they dropped, we had that big correction. And now we're seeing another kind of a bounce back up to 60K, but the whales aren't accumulating this time around. They're kind of staying low. So it might be a bit of a false bounce based on this alone. But of course, we want to factor in everything else we've shown so far: social sentiment, mean age, and many other metrics that we can't even touch on here in an hour. But interesting to see there. And Dino, if you have anything to add to this, feel free. If you want me to show percentages or anything like that.
Sure. It looks like if you look at the merged groups, just so deselect everything and just select 100 to 1,000 and 10,000 and 1,000 to 10,000 group, but by the balance of addresses rather than the number of addresses. So by the way, we've made some changes to the tree metric tree. So for example, now we have a number of different categories of metrics inside the on-chain category. We've introduced whales as a category, long-term holders as a category. So pretty much all of the metrics are the same. We have just tried to kind of simplify how you find them, right? So you will find this metric under supply distribution and then by balance of addresses. So what we're going to see is we're going to see the amount of Bitcoin being held by addresses holding between 100 to 1,000 and 1,000 to 10,000 BTC. So these two groups in particular, because as you can see already, they have kind of been playing, mirror matchups between the two of them. So when you merge them together, Brian, so merge them together and select only the last month of data. And you'll kind of see, and if you can show the price. There we go. So this is what it looks like, right? The last sort of week and a half is probably the most interesting. It essentially shows that the total balance of these two groups of addresses, so basically Bitcoin millionaires and up, right? So anybody above 100 BTC already has more than $5 million worth of BTC at this point and up. So these two sort of groups of holders together have started after a period, sort of a week-long period of accumulation into the rally, they have started to decline. Their combined balance has started to decline right around the top on March 14th. So far, it has not recovered, and it continues to range around the 48.7% of a Bitcoin's total supply. Brian, if you want to move from percents to absolutes, just so we can see exactly how much BTC they have kind of collectively shed around the last price stop. Yeah, there we go. So just move from, yeah, that's the number of addresses. So you want the balance of addresses instead, a different chart. Yeah, that one, and just look at the absolute numbers.
Well, I've got to deselect all these, so one moment.
Oh, you can just control and click on any asset and it will deselect everything else. Just a quick
good to know.
Quick tip. Yeah, so just select those two groups and merge them. And plot the price against it as well. All right, so how much Bitcoin did they actually remove from their combined balances between, not just around the latest top. So here we had around 9.13 million. And then at the end of, now it's 9.1, but there it was 9.09. So it's about what, 40,000 Bitcoin. So that's, I think, about $2 billion worth of BTC that have moved away from these wallets in just 2 days. During the latest, well, basically during Bitcoin's all-time high. So definitely, I think in general, these two groups over the last 2 months have kind of mirrored each other, which to me suggests that there has been some internal reshuffling from the larger group, so 1,000 to 10,000, to the lower group, 100 to 1,000 BTC. My hunch would be that large institutional addresses are just changing custodian wallets and they're moving their bags into a cluster of smaller addresses rather than one or two big wallets. And that's why you see this sort of mirror matchup between 1K to 10K BTC group and 100 to 1K BTC group. But when you merge them together, you kind of see the pattern a bit more clearly. And in general, the pattern seems to be a decline of $2 billion worth of BTC around the latest top. It has not recovered yet. Ideally, what we want to see is we want to see what happened between March 5th and March 13th. So basically this massive spike. So that was about, I think, 50,000, even 60,000 BTC in a span of about 5 days. Definitely a bullish sort of, accumulation spree there which coincided with the rally. So institutionals were on point there. Currently, we're not seeing it. So for now, for the time being, keep an eye on this chart, especially these two groups in the next maybe 4 to 7 days. If they start to accumulate once again, we might see another sort of push above 60K and maybe a more sustained push. But this type of very stern and immediate decline is probably also going to be show an increased risk of another price correction, right?
Yeah, interesting stuff. I like the perspective of looking at what the 100 to 10,000 groups are doing in terms of their accumulation and declines in terms of absolute Bitcoin. This is an interesting view that I don't typically look at myself, but I definitely will be going forward, and I recommend this to our community as well. All right. Speaking of whales, let's briefly look at what the percent changes are for our 40 plus asset model here.
Oh, before you go into that, Brian, let's just tell the people that are looking at this live, watching this live, guys, we're going to start taking questions, or actually, if you have specific assets that you want us to look into after we're done with Bitcoin and Ethereum, let us know in the chat. I have a basic attention token lined up because I thought it was interesting in terms of the patterns that I saw over the last couple of days as Grayscale kind of announced that they will be taking basic attention token as one of the new products. But if you have other assets that you would like us to take a look and do some impromptu analysis, especially now while Bitcoin is ranging, some people believe that as Bitcoin ranges, there could be a potential for price uptick for a lot of alts, especially sort of mid to low cap alts. So if you have specific coins that you kind of have your eye on and you would like us to do some very short impromptu analysis, maybe take a look at between 3 and 5 indicators just to kind of give you a very sort of a 5-minute look at what we think based on on-chain and social data, let us know in chat so we can take a, we can already start preparing while Brian is talking. Sorry, Brian, go ahead.
Yep, no worries at all. So we're looking at the amount of percent change for whales, what we deem whales, whether that be, a million or more for the really small assets, or just 100 or more, or 1,000 or more for assets like Bitcoin or Aave or Wi-Fi. This will essentially show the percent change in the amount of whales over the last 1 day, the last 7 days, or the last 90 days. So the 1 day is the yellow bar here, the blue is the 7-day, and the purple is the 90-day. I've got it sorted right now to show what the last week is from highest percent change in whales all the way down to lowest percentage. Bitcoin, of course, here is at the very end. I have it on its own axis, so it's always at the end with bigger numbers, so it's not confused with the rest, and it's easy to find. You guys can access this model just by downloading the link. You'll find it on our landing page, and you'll be able to plug in your API by going to the add-ons page, Sand Sheets, and plug it in with your Sandbase Pro API. But what this is showing right now is that Aragon has had almost a 10% change in whales over the past week. MATIC also very much up there. You'll see Status, you'll see OhMy's Go, which is now known as OMG, by the way, Storage, Wi-Fi, Sushi, among many of the assets that are showing accumulation this week. We're having a lot more that are showing a high amount of accumulation that are well in the positive, as opposed to just a few that are in the negative. Negatives include Bancor, Nexus Mutual, Fetch, Decentraland/Mana, Uniswap, Kyber Network. But you'll notice these skinny columns here are the actual price changes. You'll want to look at the ones that are showing a high holders percent change, but are still kind of in the low price range, right? So MATIC, for example, it's almost up, it's 9.3% more whales over the past week, according to this model, but the price change is negative 1.34. That would be a good bullish divergence on this model. Whereas, even though Aragon is up 9.5% in whales, it's already reacted in terms of price and is up 27%. So between these two, this one would be probably the better opportunity if you're looking at from an objective mathematical standpoint of which asset has not reacted to the increase in whales that have been showing, right? So look for those, right? Look for the ones that have positive whale accumulation, but still low in terms of price change. Yeah, that's all I'll touch on for that. Really quickly, I'll also show our MVRV model, which I just put up a post about. This essentially measures the average returns for the 1 day, 7 day, 30 day, 90 day, 6 month, and 1 year divergence for many different assets, right? And the more those returns for the average traders are, the more risky it is, right? Because you want to have the average traders actually down money to increase your chance of making money. You want to buy into other people's losses and sell when everyone else is euphoric and up a lot of money. Right now, everyone is up a great deal of money, especially on the long-term basis, because as many of you would know, the 30-day, 90-day, and 6-month returns of crypto have all been fairly through the roof. And that's why you're seeing so much red here. So this is essentially just measuring how assets look from an average trader perspective. And right now, average traders have been profiting a lot. Therefore, there's a high increased risk compared to the norm for most assets. You can see Bitcoin here almost touching this dashed line, which is essentially the top 10% most risky scenarios when it comes to MVRV. And you can also see Ethereum at negative 0.7, a little further away from the danger zone, but also well into the red even still. The only one that's actually in the semi-underbought territory is synthetics right now, and that's mostly because it's dropped significantly over the last 7 days. So keep that in mind. Interesting model. The last one I'll show before we start taking questions here for our last 20 minutes or so is the price NVT comparison for Bitcoin, Ethereum. What this is showing is the token circulation versus market cap over time, adjusted with trend lines, because overall NVT tends to go up just slightly, we've found, over time, no matter what the metric is, or the asset is, that is. But right now, you can see we're at our first red bar in 6 months, right? October, November, December, January, and February all had a semi-bullish indication because token circulation was increasing. And for the first time, we're actually getting a bit of a bearish signal because of the fact that token circulation has moved down while price has moved up. That generally is not what you want to see. It's going to do a refresh here in a minute, so this is going to disappear. Don't mind it. Overall, though, we're barely in the red. Before the end of the month, this may change. We could see an increase in token circulation and have it move down. But as we speak now, we're not getting enough token circulation to justify the market cap. And it's a bit of a concern as we're rounding closer to 60,000 as the week is starting to come to an end. Many people could get faked out, assuming we're going to just zoom to a new all-time high, which very well could happen. But if it does happen again, it won't have the same level of support that it happened a few weeks ago, when there was more token circulation happening when that occurred. Keep that in mind. For time's sake, I won't show Ethereum, but I can tell you that it looks, actually it is showing up. So really quickly, I'll just show you that it is looking pretty good. It's actually in a semi-bullish territory now, as opposed to the bullishness, the ultra bullishness that we've seen for mostly the last year or so. So keep that in mind too. It's slipping just a little bit in terms of token circulation. So a bit of a concern for both, especially Bitcoin right now. That being said, we're about 43 minutes after. So let's take this last 15 to 25 minutes, whatever we need to take, to answer as many questions as we can. I'm going to stop sharing my screen, but I'll try to help out on some insights as Dino shows his.
Thanks, Brian. So I see already a few questions. I saw KNC being mentioned, or Kyber Network, and I saw a few for Mana in particular. So let's start with those two and see where we end up. So KNC, I think, is interesting because obviously it's had a very nice month, especially very nice week. I think it's mostly because rumors about the 3.0 launch that are driving this price rally. At least that's what I've been seeing. Let me know if you guys know of any other specific reasons for the KNC pump. Let's check out a few metrics for KNC, which I thought were quite interesting. While you were talking, I was already looking at a few of them, Brian. So first of all, let's start with daily active deposits. And by the way, it's showing no data here, but that's just a bug that's being fixed by our front-end team. So don't worry about it. Obviously it's showing data. So daily active deposits is a metric that shows the amount of unique deposit addresses that are active on a daily basis. What that means, what deposit addresses are, for those unfamiliar, they are addresses that are being used to funnel money to exchanges, right? So when you see a spike in KNC deposits, that basically means a spike in the amount of addresses that are moving KNC to centralized exchanges. Therefore, sometimes we use them as a proxy for general or network-wide rise or decline in sell-side pressure, right? So when you see spikes in deposits, it does tend to suggest a rise in short-term sell-side pressure. It suggests that a lot of people are starting to move KNC on to exchanges, presumably to sell. And there, on the other hand, if you see a sort of decline, it does seem to suggest exhausted sell-side pressure as well. So as you can see, obviously there has been already throughout the past couple of months, there have been several spikes in daily deposits here around this local top, as well as a cluster of daily deposit spikes before the imminent correction. There was obviously, after a period, basically a 7-day period of a relative dormancy in terms of what the KNC deposits were doing, there was a fairly significant spike yesterday, or actually today, right? So completely understandable why we were already seeing KNC start to chill out for a bit or cool off a little bit today, as this sell side pressure has sort of been difficult to absorb by KNC bulls. Usually when you see these spikes, especially during price rallies, it takes a lot of buy-side pressure to absorb this type of spike in sell-side pressure, especially when the price rallies, because it would mean that KNC bulls would be happy to buy up this pressure at a premium. Was this an all-time high for KNC, I believe? And usually that just doesn't happen. Therefore, these types of spikes are concerning for the short-term price action, and it's definitely not a surprise for me that it's already started to correct a little bit. On the other side, you also want to look at the amount of actual KNC being moved to exchanges rather than just the amount of addresses that are moving KNC to exchanges. So for this, we use exchange inflow, which is the metric that shows the total amount of KNC coins being moved to centralized and decentralized exchanges on a daily basis. And you can actually select, currently we're looking at all of them, but you can select specific centralized or specific decentralized exchanges that you want to kind of analyze further, right? So a few points here. Obviously, there was this massive spike in exchange inflow right before the correction for KNC. So I'm going to actually zoom out of it just so we can see this latest move a bit more clearly. There we go. Once again, there has certainly been an uptick in the amount of KNC being moved to exchanges over the last 72 hours or so. This is usually, consistent with short-term price corrections or local tops for a coin in question. Again, definitely not a super bullish signal for the time being, at least. However, you can already see that the sell side pressure is starting to wane or decline. It seems like a lot of people were just trying to take advantage of the pump, moving their coins to exchanges, selling at a profit. And in the meantime, I think we're over the last maybe 24 hours or so, it's already that sell side pressure is already starting to decline. I would certainly wait until that sort of exchange inflow completely normalizes and the daily deposits also fall down to normal levels once again, just to let me know that weekends have kind of been shaken off the market and we can maybe prepare for another leg up. For now, I would be cautious about moving into KNC for the time being, right? It's just based on exchange metrics alone. I want also, however, to check out two more metrics for KNC, which I think are quite interesting. Number one is network realized profit or loss. So let me show you this metric. Okay, I'm going to zoom in again, obviously because of these massive spikes here and here. So what network profit or loss does is it tries to calculate the total return on investment across all transactions on the blockchain. So how do we do that? Well, for each coin, each unit of KNC that moves on the blockchain, let's say there was a 5 KNC that moved here. So for each unit of KNC that moves on the blockchain, we take the price at which it was last moved, and we assume that was its acquisition price, its buy price, right? And then the next time it moves on the blockchain, let's say those 5 KNCs move here, we take the price at which it moved then, and we assume this to be its sell price. And then we take the difference between those two prices, and the result of all of those differences for all transactions on the blockchain is this metric. So when you see spikes in net profit loss, it means that the coins that are moving on the blockchain at that particular point in time, like for example here, are doing so at significant profit, suggesting large profit taking. And then when you see declines or dips in net profit loss, like here, here, and here, it suggests that coins that are moving on the blockchain at that particular point in time are actually doing so at significant loss, suggesting holder capitulation. And very often, well, I don't want to say very often, but sometimes we definitely see these sort of dips in net profit loss coincide with local bottoms, because it basically means that the people are kind of capitulating away from this coin for the time being. General sort of panic selling, which is being captured by this metric. So if I zoom out here, or actually zoom in, zoom out of this major spike, this is what it looks like for the last 7 days. And this is very sort of typical, a typical way how this metric works. Like you see massive upticks in net profit loss pretty much around every local top. So here, 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 and then eventually the biggest spike. This one, I'm not sure exactly what it is. So the downside of this metric, obviously, is that it assumes that all transactions on the blockchain are transactional in nature. It assumes that everything is buys or sells of a particular coin. So for example, if somebody's moving a bunch of KNC to a DeFi project of sorts, it's not good. Like it might skew the data, or it might show up as a spike in profit taking, whereas in fact it wasn't necessarily profit taking to begin with. So this is why you should always take it with a grain of salt, and this is why it works for some coins like Bitcoin better than others. But in general, I have found it to work fairly well, especially during price bumps. When you see sort of coinciding spikes in net profit loss during rallies, it usually means that people are taking profit. So we've seen a number of spikes here around during the price rally, earmarking local price stops, and in general suggesting that a lot of people are actually taking profit, applying downward price pressure, and probably usually we see this eventually coincide with a local price stop and an incoming correction. However, we've also seen already a beginning of a holder capitulation here so after basically a 7-day period of dormancy, there was a bunch of spikes in net profit loss, and then finally, after it started declining, we've seen several dips in net profit loss, suggesting that at these points in time, people are already starting to panic sell the coin. Probably people that have bought here, feeling burned and deciding to exit the coin for the time being. This is pretty good. It's usually, I mean, like I said, not necessarily usually, but sometimes we see these dips coincide with short-term price recovery periods, as it already has for KNC now, right? So for the time being, there seems to be already or also still some net profit taking spikes. So on my end, I would definitely maybe wait a little bit until this entire sort of sell wave or sell wall is done with and absorbed before considering entering into a coin. But this is what it looks like for now. It seems like people are continuing to take profit from the KNC rally, which sometimes does, like you see here as well as here, as well as here, right, during this KNC top. Sometimes it tends to kind of suggest an increased risk of a correction rather than an uptick. And finally, let's look at MVRV, one of our favorite metrics here. MVRV tracks the average profit or average loss of all addresses that have acquired a particular coin in a particular time range. So for example, the 30-day MVRV shows the total or the average profit or the average loss of all addresses that have acquired KNC in the previous 30 days. So it's basically the average profit margins of short-term KNC holders. So the way that on-chain analysts use this metric in general is that the theory or the rule of thumb is the higher the MVRV is, the more unclaimed profits there are, the greater the profits of, in this case, short-term holders. And therefore, there's an increased risk that they're going to start claiming these profits and applying a lot of sell-side pressure on the coin, right? Which may indicate a period of downtrend for the coin's price. And then on the other hand, the lower it is, it suggests that the network is undervalued or underbought according to this metric, and might suggest an opportune time to accumulate. So you can see kind of these bottoms in 30-day MVRV coincide with short-term recoveries for KNC as well. So obviously, when we look at what's been happening because of this rally, KNC's 30-day MVRV has kind of exploded. I think it peaked at about plus 50%, which basically means that on average, every address that has acquired KNC in the past 30 days was about plus 50% in profit. And as you can see over the last 6 months, it usually, KNC's 30-day MVRV has a tendency to sort of peak between 30 and 45%. So we've already sort of overshot it here, suggesting that this type of MVRV level is probably unsustainable and it needs to normalize before we can go up again, right? There needs to be a period of profit taking, people claiming their profits, and therefore sort of declining the MVRV in the process before, and so we normalize into these sort of average ranges between maybe 19% and 0% or even below break even before we can move up again. For the time being, KNC's MVRV, at least 30-day MVRV, remains pretty high, 35% at the moment. So it means that on average, short-term holders are about plus 35% on their initial investment, which I think might suggest that there could be another sort of wave of sell-offs. So 35% was actually the sort of level at which we saw last KNC top, right, before a correction. So for now, it does, at least according to this metric, it still feels overvalued. So we can also take a look at long-term KNC holders, and it's pretty much the same story, just on a different scale. So the last top for KNC was about plus 82% for long-term KNC holders, all addresses that have acquired KNC in the past 365 days. Here we've already overshot it to almost 100%. So basically they were 2xing, they're doubling their initial investment before they started selling off. Currently we're at about this level. So the same level where we actually see KNC correct from its latest price top. So according to MVRV, KNC definitely feels still a little bit overvalued. That being said, in a bull market, MVRV is a difficult metric to gauge. Sometimes, people are more than content holding on to their 2x or 3x profits before they start selling off, right? It's always that's always a question of how high of profit margins are holders going to be comfortable with before they start selling. Obviously, currently there's still a lot of money on the table that KNC holders can take and get out the coin for the time being. The question is whether they're going to do it or not, right? At least according to this metric, we're currently quite a bit overvalued. And then finally, I want to look at some large KNC holders. So I think this group, usually these last two groups, especially the last group in particular, is reserved for team wallets and exchanges, right? So usually I like to look at these two groups for low to mid cap coins and top cap coins as well, because they seem to suggest, that they are they seem to mostly be populated by actual individual addresses rather than exchange wallets. So as you can see here, this group, 100,000 to 1 million KNC holders, they've kind of been accumulating throughout this rally, and then there was a decline right around the local price top here on February 15th. However, if we currently zoom in, they're not selling just yet. So long-term holders, large holders are not showing signs of sort of, market fear into this correction just yet. So we've seen this happen last time. Obviously, past performance isn't indicative of future results, but we have seen that happen around the last KNC top. For the time being, large whales are not selling KNC. So that could be, I would definitely keep an eye on this particular metric over the next couple of days, especially if MVRV remains this high. If we see a coinciding sort of decline in whale balances, it might suggest that they are starting to take profits as well, and it could suggest another sort of period of price correction for the coin. So that's KNC. I also want to look at Mana. Okay. So Mana, I mean, just a ridiculous rise. I think this particular rally we wrote about. I wrote about Mana recently. Where was it? It was here. So if you wanna read my opinion on this entire sort of Mana rally, why it happened, where we saw particular sort of yellow flags begin to emerge, I suggest checking out this insight. This latest sort of bounce back, I believe, is mostly connected to Grayscale announcing Mana as one of its new products alongside Basic Attention Token and a few others. So let's check out a few of its metrics, right? Let's start with social volume, or the total amount of Mana related mentions on crypto social media. So usually this is what we see during price rallies. We see these massive spikes in social volume, suggesting that a lot of people are starting to talk about this coin that otherwise haven't been talking about it. Usually it suggests that the crowd is becoming hyper aware that the rally is happening, and pretty much everybody that wanted to get into the rally is already in it. There's not going to be enough additional buy side pressure, and usually it indicates local price stops. It suggests overhyped conditions, oversold conditions, and a period of price correction incoming, right? So this is what we saw during this period, this Mana rally. Currently, we're not really seeing the same amount of hype towards Mana with this latest Grayscale announcement. So we saw it here pretty much around both this local top and then all-time high. At the moment, the crowd is not paying too much attention to Mana, which is good. You don't really want the coin that you're interested in to be in the limelight or the spotlight. You want it to kind of fly under the radar. So I would definitely consider this to be a relatively positive sign, especially if it continues over the weekend. It seems to suggest that the crowd is, for the time being, not really paying too much attention to Mana, allowing for a potential period of upward price move if other fundamentals and general market conditions allow for it. So let's also look at exchange-related information. Let's check out deposits. Yeah, so pretty much similar to KNC. Same thing, right? You can see these spikes. All of these lower tops or smaller tops now pale in comparison because of this rally. But at the time, they were very strong price moves or price upticks. So you can see pretty much each of them being marked by a spike in daily deposits, suggesting that a lot of addresses were moving Mana to exchanges. And it's the same thing that we saw here around the all-time high. Currently, even with this Grayscale announcement, we aren't really seeing the same uptick in daily deposits. For now, it seems like not a lot of people are, additionally over the last 72 hours moving Mana to exchanges. It seems like that sort of sell side pressure hasn't really come along yet for Mana. Also seems to be validated by its social volume. Not a lot of people are talking about Mana. Not a lot of people are moving to sell Mana, which might allow for its price to accrue in the next couple of days. So let's see exchange inflow as well. But yeah, same thing. So the total amount of Mana being moved to exchanges, and I can actually take a 1 day look rather than, this is 12 hours. Let's take 1 day. Yeah, it's been on a decline for a while now, especially over pretty much in this week. We haven't really seen a whole lot of Mana being moved additionally to exchanges. That being said, I'm not sure if all of this sell side pressure has been properly or fully absorbed. So keep that, take that with a grain of salt. But over the last couple of days, pretty much this entire work week, we haven't really seen an uptick in Mana being moved to exchanges, which is, good if you want to see a short-term price recovery for the coin or price bounce back from these levels. Now, let's see obviously, guys, I'm jumping across a bunch of metrics that we generally could cover, but for the sake of time, we don't. Like, for example, we haven't really talked about whales or whale transactions. So this is another thing that you might find interesting, is that very often we see these spikes in whale transfers. And by the way, this metric shows the total number of transactions, of mana transactions, on a daily basis that are transferring more than 100,000 worth of mana. So we've done some backtests recently, and we found that it seems, on a sample size of about 1,000 different coins, it seems that these massive spikes in whale transfers often kind of suggest the beginning of the end for the rally, right? So it happened here, as well as obviously during its price all-time high. So a lot of whales moving their coins, presumably to sell, also suggests that we are going to see a period of price correction for the coin. Over the last couple of days, the metric has begun to normalize. However, it's not there yet. So there is still a sort of an uptick, slight uptick in mana, in the amount of $100K plus worth of mana transfers. But obviously this needs to be taken with a grain of salt, because the price of mana itself has appreciated so much over the past couple of days as well, couple of weeks. So with that being said, I do want to look at MVRV in particular. Okay, well, let's take the last 6 months. Yeah, so obviously, I mean, when I wrote about mana, it was around here, I think. Let's see where I wrote about it. Yeah, it was around here. So I thought at the time, I thought that MVRV was already getting pretty high, and therefore we might be in line for a short-term correction. That happened, but it just wasn't enough. I think this is the sort of the general hallmark of a mania, when you see these sort of massive spikes in both the price and MVRV, suggesting that at the moment, Mana was the coin because of NFT-related hype. Mana, Engine, Chili's, all of these ERC20 coins were being bought up by anybody, but by people that thought NFT were the next big thing, because they have high liquidity and they're all connected one way or another to the NFT movement. So obviously, I think this was. So it suggested that we are very, very overbought, very overvalued according to on-chain analytics, and therefore a short-term correction was imminent, right? So for the time being, or at the moment, Mana's MVRV is still remaining fairly high, so about plus 55%, which is actually similar to both the January and previous March top here. So there's still a lot of profits potentially to be claimed by, in this case, short-term mana holders. And let's look at long-term mana holders as well. 365-day MVRV ratio. Oh, I want to look at the intraday one. Sorry, one sec. There we go. So yeah, still very high, plus 141%. You can kind of see where we were last time before Mana price started to correct, about plus 168%. So slightly lower than that, but in general, definitely still overvalued. I would proceed with caution. Like I say, MVRV is a difficult metric to gauge during bull cycles, because what is usually a period of profit taking during the bear cycle doesn't necessarily need to be a period of profit taking during the bull cycle. Or in other words, people are more than content during bull cycles to wait a bit more for their profits to accrue even higher before they start selling. So always take that with a grain of salt when looking at the MVRV during the bull market or bull cycles. All right, so I think that's gonna have to do it for us for today, guys, because it's already been 65 minutes after we started. I want to, before we end, I also want to just revisit our SANR prediction. So for those of you that haven't been around during last stream, one of the new products that we're developing is called SANR. It's a decentralized marketplace for price prediction signals. So I suggested last time that if any of you wants to sort of compete against us, you can choose or create a signal where and you don't need to actually spend any money on it. You can just set up a signal that you believe that the price of a particular coin is going to rise or it's going to fall, and it creates an NFT, which is obviously all the rage nowadays, an NFT of your prediction. And it gets sort of recorded on the blockchain forever as a part of your general market sense and market awareness, whether you are correct or you are wrong about your current or past price predictions or market predictions. So last time during the stream, my forecast just closed. So last time during the stream, I suggested that Bitcoin price was going to rise because I thought my reasoning was, well, first of all, I was just showing how the platform works, but I think my main reasoning was, okay, well, the social sentiment is very low, so there might be another sort of period of price recovery for BTC, and it seems like for now, my prediction is about 5% up. So if we look at all my forecasts, this is the one that closed just now. So this was made 2 weeks ago during the stream, where I put a rise or sort of an upward signal for the price of Bitcoin. So I've said that Bitcoin was going to rise here, and this is what happened since. So, I mean, both of these were kind of done during the stream just to kind of demonstrate how the platform works. So obviously it wasn't like, me actually suggesting that Bitcoin was for sure going to rise. But very quickly, if you guys are interested in competing against me and other people on our leaderboard, and just kind of also checking out how other people are currently reading the market. These are active forecasts for not just Bitcoin, but a lot of different coins like Engine, Cardano, Aave, and so forth. You can kind of see how our community currently reads the market, whether they think a particular coin is going to rise or not. And, next week during the stream, we can kind of analyze your performance versus our performance. So very quickly to kind of show how how the setting up a price signal works, you can simply set first choose an asset. So we currently have about 25 different assets on the platform, majors, contenders, and then a lot of different DeFi coins. So let's say I'm currently interested in Bitcoin. I think, I don't know, because of so this is obviously just an example. Because of high MVRV rates, for example, I can, actually, have we talked about any of the coins that are here at the moment? So KNC, for example, okay, even better. So because of that high MVRV rate that I saw for KNC and maybe high exchange inflow over the last couple of days, let's say that I think that KNC is probably going to keep falling or correcting a bit more, right? I can also set up a few advanced filters like the target price and stop loss, but I'm not going to do it for the time being. So I think especially against Bitcoin, KNC might have a potential to decline further over the next week. So I just open a forecast, and there we go. Here it's lined up. The next sort of cycle is in 14 days, where if you're interested in actually getting into a pool, a reward pool, you can actually stake SAN, 5 SAN, to enter your forecast in a reward program. So every 14 days, everybody that has staked SAN actually gets, the best performing indicators get part of the reward pool in SAN. Currently, there's about 10,000 SAN being awarded for this for this 2-week cycle. So if you're interested, if you want to play with us and generally kind of gauge how both me and other people in the Santiment team and Santiment community currently read the market, check out sanr.santiment.net. Log in your predictions and let's see who gets the best of who next stream. So I think that's going to do it for us. Brian, anything before we end the call?
No, I think you covered SANR well. Definitely encourage you guys to check it out. It's going to be a really great platform once it's really rolling and we have a nice community using it. So definitely check it out, and we appreciate everyone for coming on. Please feel free to spread the word. Use your referral link in the top right where you see Dino's avatar right here on the screen. You can open up your own and generate a referral link and get 25 to 35% off or 25 to 35% commission of any that you share. So really cool there. Highly recommended. Any questions in the meantime, ping us on Discord and we will be around, and we wish you all a great, great weekend.
Thanks, guys. Thanks for joining the stream once again. We'll talk to you in 7 days. Check out SANR, and yeah, let's battle it out for next week. Yep. Talk to you soon, guys.
Take care, guys.